Hi everybody, welcome to a special edition of Mish's Daily and Mish's Market Minute, evening edition done through video. Today is Thursday, April 19th, and I'm the Director of Trading Education Research for MarketGauge.com. So let's start with the spiders because I think it's a very interesting chart. Today was a day that was treacherous, which also often happens when we're in a transitional mode, and clearly that's what you can see is going on. When we went into the warning phase after this big drop, it was confirmed and then it went back and forth, back and forth, back and forth. So it's trying to find its way. So in this particular case, we still have an upward sloping 50-day moving average. We've closed beneath it, which puts us in a weak, unconfirmed warning phase. But what I think is the most ominous signal that I see right now is the volume. And if you look down here at the volume, on the day we had the big move down, we had obviously a huge distribution volume day. And then as we worked our way up, we didn't really make any great shakes on the volume going up. And this is something that has been a concern obviously for a very long time as we made the whole move. But just looking at recent times, then if you look at today, we had another distribution day in volume with this indecisive day, with the market down. So that right now, unless we clear back through the high from a couple of days ago where we filled that gap and continue on up, at this point I would say I would certainly not be looking to be aggressively long, and I wouldn't necessarily be aggressively short, but I would start to be looking towards that possibility, especially as earnings season continues and if we don't get a push up even in the face of some of the great earnings that we've had. Now let's take a look at Russell because that's the bigger clue that we've had a while back. We've been in a confirmed warning phase ever since we dropped down here. We made that new high intraday low back at the end of March, and it's been just kind of dicey ever since. So you can see here that even after this big day, we did have another distribution day in volume. We never really got great volume on the way up. We never even got past the 50-day moving average. We're not oversold. So I would say if this thing cannot get firmer and again fill the gap and then close beneath, these were all the signs that I was writing about in my daily analysis of why I was not bullish even on this correction. But then again, respecting the phase, not altogether bearish. So churning transition, that's what we're seeing. So probably of these two, the next one, which would be Nasdaq, is the clearest. And the reason why is because even though we have mixed signals here, we have the three highs, we have a declining fast moving average, an upward sloping 50-day moving average, we're still in a bull phase. Again, we've had our second distribution day in volume. We cannot seem to clear, even in this little attempt here, to get past that fast-moving average, especially on a closing basis. And even though we're hanging on to this the first time, the second time may not be so lucky on the third time. So what could very possibly happen going forward, and what I would be looking for here potentially, would be maybe a break, a couple of days break of a 50-day moving average. Perhaps the slope will stay positive, as you can see here. And then if we can get a rally back up to the 50 to test, that would be the time where I would start to be thinking that we're going to see a lot more nastiness as we continue into this second quarter. Now I want to show you what type of patterns we look for by giving you the best example within this sector, within this index, pardon me, and that's Apple. I mean, Apple had what we consider a classic reversal pattern on this day right here when it made new all-time highs, closed on the intraday low, obviously never was able to clear that. And you can see that after several days it got oversold. We had the one-day correction. It attempted the 10-day moving average or the fast yesterday and gave it up today. Now, of course, I wouldn't be doing anything ahead of earnings unless you're an incredibly sophisticated options trader. But we still have obviously a lot of room to the 50-day moving average, so we're not necessarily telling the whole story here. Apple at least is not telling the whole story. But nonetheless, it's good for you to make notes of these type of patterns. When you make a new high and then you close near the lows, like you did, let's say, in one of the strongest stocks we've had, which is Verifone, it's definitely time for you to at least be considering how strongly long you want to be up in these nosebleed territories. Taking a look at some of the favorite sectors and groups of especially the ones that have been leading throughout the year, we have to start, of course, with retail. You can see that retail had that same kind of pattern I just showed you in Apple, which is it made a new high here and then closed that day on the lows. And so we've been struggling ever since. And even though we've maintained our bullish phase, we've never gone into a confirmed warning phase. We are appearing to run out of some steam here, so this would be another place to be looking, a convincing break under 60, and I think we're looking at some trouble. On the other hand, if we can get through, and again, you see how well these gaps work? We filled the gap a couple of days ago, the gap from right in here, and then we couldn't maintain it, and now we're trading underneath. And so, you know, these are some of the warnings. So if retail starts giving it up, we've already seen a lot of volatility in the semiconductors, and remember I had mentioned about that. It actually, again, second time tried to fill that gap. That number was 35.17. I said I would get excited if it got through there. Well, it tried, but it didn't make it. And now we're back under this beneath this 50-day moving average. So doesn't look like anything other than a very sloppy chart, but nonetheless it certainly doesn't look particularly bullish, especially since, once again, we had a new high close on an intraday low. Have to look at the financials. And in the financials, we had the same kind of situation where this day, and it's hard to tell, but this day we made new highs, closed on the lows. We're resting on this 50-day moving average, but again, starting to look vulnerable, especially since we have a distribution day in volume right here. We have a bearish engulfing pattern. So once again, we'll see. Now, of course, with this one, since we broke a 5-year downtrend, we always have to refer to the weekly chart. And I've been talking about that possibility where it would either try to go up and how to get through 16 to really kind of prove that this is ready for another leg up, or we're back down looking now once again around that 1440, 1450. The other one that has been leading strong and now is starting to waver, and started wavering even the last time I made this type of video, was the biotechnology. Now that did not have any kind of reversal pattern other than the fact that it made new highs, but it didn't have the classic close on the intraday low. And today we actually got back over the 50. So I would say we're back to looking at this after being one of the first ones to fail, since we have not only a hammer candle, but we also do have a return move. So we're back to an unconfirmed bullish phase today in the face of a weak market. Now, we've had some really great reports in some of the biotech stocks, and that's part of the reason. So if this hangs on, it could be the first bright spot and one of the ones to go to, but if this starts giving it up back under that 50-day moving average, that would be just yet another nail in the coffin. And of course, transportation, last one I'm going to cover, is also interesting to me because we didn't have any kind of reversal pattern up here. This was a trend line I threw in, which looked like it was going to be good a couple of days ago. Then it tried to hang on to it. And of course, today it gave it up and closed marginally beneath that 50-day moving average. But look at the difference from what I just showed you with IBB and what I showed you with XRT, is that the slope on this 50 is actually down. So we keep going back and forth here, but this one really had the most weakness in that this went all the way down to test what we call the 160 exponential moving average. We also have a downward sloping 200-day moving average. So unless we do some work here and then start getting through the highs and looking like we're going to get through the recent highs, we start to roll back down. This would be another one to be looking at, although not necessarily my first place as a sector to go short. For that, I like to look generally at OIH, which has maintained its negative phase, XLE, which has maintained its negative phase, and gold, actually, believe it or not, which went into a death cross a couple of days ago, actually closed up on the day today, and it's the one little wild card here because even though it now is in a bear phase, of course, it's always sensitive to any either flight to safety or flight to quality or obviously any kind of political unrest, that sort of thing. So I would say right now the indication is to be short, but on the other hand, You have to really have a broader view, and if you can get any kind of rally, and I had mentioned this the last time I did this video and it went exactly there and gave you a nice down move. Now again, I would alter that a little bit and say if you can get any rally up anywhere near 160, 150 and it starts to roll over, I'd be looking more toward the short side than the long side. The TBT, just want to take a look at that. Didn't quite make a new 60-day low today. We had that right here on this day, but it didn't quite test that low completely either, and it closed up relatively near the highs of the day. And of course, this would be another one to be watching for, in that if we can get back above this trend line, which goes back, and it's a valid trend line that would also be back over the 10-day moving average, then it's possible at least we'll see some kind of a rally in this particular, the rates, which will actually look like might be at firm. And it does seem to me that the market has been following what the TBT is doing, in that if they feel the rates are actually going to firm right now, it's a good sign for the U.S. economy, which has also been good for the market. So unless this can really get moving to the upside, that would be another factor to be watching as we go forward. Okay, that's it for those who receive the daily service complimentary. You all have a great evening and happy trading, and bye for now. My subscribers, you hang in there. I'm about to go into the picks for tomorrow, Friday, April 20th, both long and short.